Hello everyone, and welcome to the PivotBoss Google Hangout here. Um, it's my first time doing a Google Hangout, so I am trying to make sure everything is up and running the way it's supposed to be. This is the inaugural version of basically what I want to become um, a weekly event. Basically, getting folks together for a Google Hangout and doing some live market analysis, both chart review and also forward-looking analysis, so that you can prepare for the upcoming week. Maybe we can do these things at different times. For example, doing let's get this ready. Okay, maybe we can do things like at the on a Monday and have the rest of the week, or maybe we can do it on a Wednesday and have the end of the week and the first part of the upcoming week ready to go. But I wanted to get out in front and just connect again and kind of show off some of the new tools that I've developed here, especially for some of you that have followed me on Premium and also Masters and at Mr. Top Step. There's a lot of new cool tools that I've developed over the course of the summer here to help what we do become much easier and more efficient as we trade. But I'm really excited here to have everyone here. The primary goal for today is to have a live futures review, look at the market, kind of looking to see what the market has done here lately. We got a contract rollover that began today in the E-minis, so we'll be able to watch that. We'll be able to look at some chart review and just kind of get a full-on market outlook of the four major futures contracts that we follow here at PivotBoss. So without further ado, let's go ahead and get started. First of all, just welcome. My name is Frank Ochoa, aka the Pivot Boss. I am the author of the book Secrets of a Pivot Boss. Many of you were introduced to me through that book. Others have been with me since I was at my prior firm way back in '01 all the way through 2011. Also, I've been with Pivot Boss here, started this up back in '09, doing this for 5 years here, and as a Pivot Boss standalone, and I've done some really good things here with both trading, education, and also out in front with articles with the Mr. Top Step group and others. So this has been a lot of fun over the last few years, and I really wanted to get out and in front of it and ready to go for the fall after a very relaxing summer. Let's take a look at the markets here. One thing that I really wanted to start off looking at first was crude oil. You can see down here at the bottom right, this is the daily time frame of crude oil. If I bring this up a bit, you'll see how significant today's daily candle was. That bar right there is from 90.44, 90.43, all the way up to 93.43, 93.44. Basically a 3-point range on the day. If we look at the average daily range on a 10-day basis, right now average daily range after today's session is $1.81 per day. Today was $3. The prior session was $1.73. So you can see that the daily range was significantly higher today. So it was a failure to expand the range to the downside and a huge reversal to the upside. Basically, this pattern right here is kind of like an outside bar reversal. I call this the bullish outside bar pattern. When you have the low that's lower than the prior session's low, and then a close that's higher than the prior session's high. And it's a little different than what other people do, but that's usually the way I like to classify it, and that's a serious reversal candlestick there. Typically what you'll look for is some kind of pullback, a defense, and then a continuation to the upside. And one thing that I was noting was 92.50 as a big-time support zone this entire time. That 92.50 is a big-time level. And we had a failure to push below that zone basically late last week, early this week, and that was a trap right there. Short term, prices pushed back up. When it got back above 93.53s, they trapped them again and ran the downside stops. And when price got here very close to those 90s, it hit that expansion target at 90.75. We got a huge rejection of those lower price levels and a continuation all the way up to 93.53. Coming within 10 or 9 ticks of that level. And I mentioned before, if price is able to pop back above 92.50, look for a test at 93.53. That's the biggest level on the chart right now in terms of value. That's the composite VPOC, 93.53 composite VPOC, which is the composite volume point of control. That tells you where volume, the most volume is in the chart, basically where the most buyers and sellers have come to the marketplace, creating value at that area. That's the pink line here, the magenta line. You can see how the price is basically traded around that zone, taking it bid at times, taking it offered at other times, and rejection and defending it from above and below. So it's a very key line. So the next thing to do here is for price to push above 53, 93 bullish, come back, and then hold as support. If that is the case, you could see a continuation up toward the top of the range at 96s. Remember, we had this clear range that developed from 92.50 up to 96s, and that range right there is a 3.5 point range. I've been mentioning that that tightly coiled range implies expansion ahead, but the expansion has been very, very shaky to the downside, whipsawing, and every time price gets down there, there's a huge rejection and price pops back up. So we have a huge downtrend that's been prominent since the 105.50s, and really it's just been straight down since then. We've had periods where we've had bumps, but until price can really establish itself back above 96s, this thing is sideways to down, because that's the current trend. But this is an early indication again that we could be headed higher. So the next thing I want to see is if price pulls back, watch 92.50. You see the volume ledge right here? That volume ledge is very important. You see, this is the volume profile, the big hump, and then the volume drops off significantly 92.50 and gets lower and lower, right? That volume ledge is serving as support right now, and I know it doesn't look like it now, but this is a composite chart with lots of data in it. But this is price rejection of those levels below 92.50. It looks very, very volatile, and it's not clean, but at the same time, it is a rejection nonetheless so far. We have to see how price responds to 93.53. So a pullback to 92.50 should be defended, and that could offer an opportunity to buy this thing into 94.25 with a shot at testing the top of the range at 96s. Now, if you're a seller, you're going to want to keep 93.53 offered. So you're going to see sellers come in here and attempt to keep it offered for a shot at lower price levels. And typically what happens is after a day with this magnitude of size of range, huge 3-point range, you typically see a quiet range-bound day in the upcoming session. Since it closed on highs after a huge reversal, you're likely going to see a range form at the upper distribution of the range, perhaps testing price levels a little above 93.50 or maybe coming right at it as resistance, and then dropping back into 92.50. And that could be a 1-point range where price trades back and forth in the upcoming day. So keep that in mind heading into Friday's session. But heading out into the upcoming session, Monday after that, you could see expansion beyond that that really opens up the upside buy stops into 94.25 and beyond. So this is really cool to see how price has played off these key levels. We've nailed crude many times on this way down perfectly in our analysis and trading. It's gotten very volatile over the last week or two, which is nice, the increase in volatility. And now we've got to see if the longer-term trend change is upon us. One thing I did want to show, let me break some of these charts down, is the intraday chart of crude oil. This was significant here. Let me bring it up. And this is what I basically gave to our team of traders this morning, was the key levels for crude based on the overnight price range. And this is uncanny how some of these things happen. But what I'm going to do is I'm going to drop off a lot of the indicators here, just drop them off the set, just to provide a little bit of a cleaner chart here so you can see some of these key levels. They're pretty significant. Okay, so basically this is the way that I viewed crude this morning, and it played perfectly off these levels, and it's identifying the initial impulse move of the day, the opening range of the day. What is that range? And then after you identify the opening swing range, then you have key levels derived from that range, and it's nothing difficult. It's a very simple concept, and then from there you can watch the various key levels and their expansion levels as key pivots in the charts. and you'll see key turning points at those levels. So this is the crude oil chart, the opening swing this morning. Price opened in after hours trading Wednesday afternoon and sold off from 91.91 all the way into 90.43 in overnight trading. Okay, this is about 6 in the morning right here on these lows, and then price rallies back toward the center of the range. Okay, so you had a huge range where you had the top to top, you sold off until you found the bottom, and price bounces to the middle of the range. Once those three things occur, you have key levels now. You have the outer portion of the range, the bottom, 90.43. You have the top at 91.91, and then you have the center at 91.17. That's the midpoint of the range. These three levels are now very important. A push through the top of the range would imply a continuation to the 50% expansion target, which is 92.65. You can see it hit it here. And to the 100% secondary expansion target, which is 93.39, which became the high for the day. So in essence, what we're looking at here is this range from 90.43 up to 91.91. That was the opening range of the day. If you take that range and add it to the top of the range, you get 100%, 93.39. So basically this distance from here down equals this distance from the top of the overnight range up. And that's all that happened today. The other key moves that occurred along the way occurred at those key pivots. So you can see here, this is the 25% expansion level. Its black line came up into that level, sold off, came back. Then it tried to hold below the day's close. You see yesterday's close right here, 91.77, and right there, all of those late sellers that came in got trapped below the close, and then they became the fuel to push price back above the close as their buy stops became triggered. Then you see 5-day VPOC basically shift up to 91.91, and then that level goes bid and price rallies. And from there, it's a continuation. Look at how price rallies into 92.65, hits it perfectly, pulls back modestly, and then rallies through it, pulls back, makes its support, and then continues on into the 100% expansion target at 93.39. So basically, this is what I call the blueprint approach. It's the blueprint. What's the underlying blueprint of the market for that day? Identify it, and then read the signposts for the rest of the session. So this is the blueprint that I used this morning to help my guys and gals get on the right side of the market. I identified these two targets as the targets based off this range, and then and provided the key levels to ride the rest of the day. So very, very nice. Now once you have that in place, then you can start looking at the footprint chart to identify where price is being overbought or oversold, or where buyers or sellers are becoming absorbed and forced to exit their trades. That's when things really get interesting. So that was the crude oil chart here. Overall, this recovery, a 3-point recovery from these lows to those highs, is significant. We talked about 92.50 being important in the charts. The first pullback to 92.50 is likely going to be defended for a shot at 94, 93.95, 94, and for higher highs into the next key levels above, which I have is 94.15 and 94.87. Failure to hold 92.50 has one more try at support back toward 5-day value low, which is 91.63. But 5-day value would have to go offered for that, obviously. So holding below 92.50 would imply a pullback to 5-day value low at 91.63. Expect buyers to attempt to defend here for a pushback to 92.75. And at that point, it's a battle between buyers and sellers. Failure to hold BAL on a 5-day basis opens the door to a continuation to the downside. So that's what we're looking at in crude here. As we head into Friday's session, very, very solid bullish reversal. But overall, any pullback into 92.50 could offer a buy opportunity for another push higher, and it could be a trading range day between 92.50 and 93.50 in the upcoming session based on today's huge range. Otherwise, failure to hold 92.50 opens the door to a retest at lower levels into 91.63. All right, let's take a look now at Let's take a look now at the gold chart for a moment. Here's the EOD gold chart. Some of you know that I've been on this chart for expansion for some time. We obviously formed this very tightly coiled range that had formed over the last several months and then coiled up toward the apex of that range before seeing downside expansion. This was important because 1280 had been such a huge area of support. Prices attempted to hold below that level and then rallied in the 1295.70. From there, sellers defended the center point of the range and then pushed the downside sell stops through 1275s into our downside target at 1244.5. That was important. 1244.5 was our downside target that we were calling for ever since we failed to hold above 1300. We reached that level, which is very nice. The other thing to keep in mind is this is the key range that I'm watching here. From 1242.40 up to 1349. The center of the range is 1295.70. Look how price has battled around above and below the center of the range. When it finally gave it up right here, that was the final calling card after we hit a new low. Because when price came back, sellers defended that area eagerly and pushed price downward into the bottom of the range and into 1244.5, which is the HVN, the high volume node of this composite profile. Composite VPOC is still at 1290.10. Now, one thing to keep in mind with regards to gold is the fact that we've been extremely bearish. We've been trending lower for some time now, but this overall range is very tightly coiled, so that means we could see much, much more movement ahead. Okay, we could see a whole lot more trending activity, but it kind of all depends on what happens in this zone right here. I mean, this zone from 1235 up to 1245, you know, there's a lot of support in that area, and then clear air back toward 1190s, 1189s. So this is the ledge to begin to watch out for. If prices hold here, we could easily see a bounce right back into the center of the prior range at 90, at 1295.70, with a scaling point at 1269. So this is the area to watch here. Watch this zone. Buyers holding this area are looking for 1269, 1280, and 1295.70. Failure to hold this ledge opens the door to downside targets at 1215.80 and 1189.10. All right, let's take a look now at, let's look at the ES. Here's a daily time frame of the ES, and this one we've nailed perfectly for some time. We talked about how price has basically continued to trend higher at just a ridiculous pace. Here's the view over the last 2 or 3 years, and every pullback has been a buying opportunity. Most recently, and this is the Z contract, so this is the new Z contract that we rolled over today. This is the December 2014 contract. But most recently, this was the big bounce that we saw. And this was at the top of the prior range, and it was also at an LVN in the chart. It was actually it was 1890 to 1900, which was the buy zone. Actually, I marked the buy zone as 1889.5 up to 1895 on the U contract. And we bounced off that zone, and we've rallied significantly from there. 100 and plus points, right? Straight away, hardly no heat. And it's been fantastic. And again, this was all based on the key range and volume profile on the charts. And this key range updated for the December contract spans from 82.25 up to 1977.75, midpoint at 1930. So there's an 8-point adjustment from the prior one, from the prior contract. The other thing is right here, 1930. That's the center point of the range. Look how price held at that level for a couple of days, broke through it and saw expansion beyond it, and then when it came back to it, it held perfectly, and that was the last blast off point before it rallied into the next upside targets. Huge move. We're now holding at highs within a tightly coiled range over the last several weeks. That's really what happens anytime you see a move of this nature, this type of expansion, a huge move, 1880s up to 2000, and it happens very quickly. You're likely going to see a period of digestion, of consolidation, of the market attempting to find new balance, new acceptance at higher price levels. And that's just what happens. Now, after you get a range that's that tightly coiled, you usually see the next phase of expansion. And right now, I don't usually put up the moving averages here, but I wanted to throw them up because price was pulling back and holding right on them. These are the 8, 13, and 21 period pivot-based EMAs. And you can see the last 3 days have held right on PIMA 21. That's right in an LVN on the volume profile. And it's right near two key levels, 72.5 and 77.75. That's kind of the buffer of support, and that's where we're holding right now. So this is the zone of support, 5-point ledge between 70 and 77 halves. That buying in that zone implies an upside continuation into the next expansion target, which we have at 20.25 half. You can see with the key range that we've developed from 18.82 quarter to 17.75, we have a 25% expansion to the upside at 2001.75. These are the highs. Those two highs wicked that level and then dropped back. Now, if it holds at this level, it's likely going to rally and break through 2001.75 and rally into the next expansion target, which is the 50% range expansion target at 25 half. The 100% would be down the road at 20.73 quarter. But first things first, we're going to play to the short-term target. So holding this LVN implies a continuation at 25 half. Failure to hold this LVN opens the doors to the test at the next HVN below, which is the high volume node where everybody wants it, 1961 quarter, and that's going to be an area to defend for buyers. So that's kind of the outlook here. The ES coiling up very, very tightly within a clear range. Expansion from this range could be very exciting, and it will be whenever that expansion does come, and it could be soon. If we drop down into the intraday chart for a moment, one thing you'll notice about this is just a 5-day here view. Very, very quiet again. This is the rollover day, so it's very quiet here. Not a whole lot to really say with regards to price today. It was a very quiet session. The one thing that was immediate was once we took the gap down, again, based on the switch over from U to Z, here's the open price, 1979s. When price rallied, it came back, held 79s as the open, and then rallied into the close to fill it. Notice how the close price was offered on first test. That's very typical on an open gap fill, as is holding of the open. So this was very, very typical behavior here, but we closed above the prior session's close price, 1987 quarter, and also above the prior session's high, RTH high, and that's bullish. Now what we want to do is we want to see if price can hold a pullback, defend on the pullback for a shot at new highs, pushing beyond 1994s, 1990s, in that zone will be very, very bullish as we head into the upcoming week. But not a whole lot to say with regards to this chart activity until we get some more data in this new contract. All right, let's take a look at the last contract we're going to look at, which is the NQ. Here's the NQ. Basically, the NQ looks very similar to the ES, a very tightly coiled range from 40, 43 up to 41.10s. You can notice at the beginning of that range how tightly coiled price was. That was heading into the holiday weekend, Labor Day. After Labor Day, the volatility has increased, but the range is still very, very clear. Very, very tightly coiled range. If we draw a volume profile tool here, you can see 67 quarter is the high volume node of the micro composite range, and price basically bounced between the 5-day value high and low, not the 5-day, the micro composite value high and low, and price continues to hold above the LVN. You see this little notch here? That's the low volume node, the valley to this high volume node's peak, peak, valley, peak, valley, peak, valley. That valley is significant at 40, 43. And you can see all these buyers here. buyers, buyers. These tails right here are rejection tails, sending price back up. These are buyers defending price every time it comes down. Price moves from rejection, which is down here at LVN, to acceptance here at the HVN, and then back to rejection, the top of value, right? And that's what it's done here. The point of this is, with all of these buyers coming in to defend, there are a ton of sell stops now building below. So if price does break through the LVN, the move is going to be swift and powerful, and price is going to see momentum down into the prior range high, which is 39.8375. So if we do break 40.43, watch it closely, sell any retracement to retest that level from below, and then look for price to drop into 83.75. Now, if price does drop into the prior range high, that's going to be a significant area where buyers will want to defend price for a longer term push higher into that 42.23 quarter expansion target above. So this is a very tightly coiled range. Expansion could be seen at any point here. I think we're very, very soon, because you can't really go 3 straight weeks and not see some sort of expansion here at all. I mean, it's just very, very tightly coiled. So we'll see some buy stops and some sell stops popped. Above 41.10s easily lifts price higher into 41.43 quarter, which is the next expansion target above. So keep that in mind. If we drop down into the intraday time frame, here's the intraday time frame of the NQ, and this is an RTH chart. You know, with regards to this one, what we've been looking for, and I know this is the December contract, but in the U contract we had 40.55 pegged, 40.55 to 40.50 pegged as major support, and this is contract adjusted, but basically these lows yesterday were 40.55, and we saw a 40-point reversal, as you may have seen in the blog post I put out last night. This contains relevance here at 40.47, as does 40.43, which is the true center point of that LVN. So 40.43 would be equivalent to 40.50, and this 40.47 would be equivalent to that 40.55. So that zone of support is very significant. When price dropped down a couple of times today, right down here, this was important because you see this VPOC right here? VPOC shifted from up here all the way down to here, and then from here all the way down to here. And when VPOC shifted down to here, anytime VPOC shifts, it tells you counterparties have come in. That means that you have bulls and bears. An equivalent number here, a high amount has come in, they've shifted value down, and enough parties have come, counterparties have come to the party to basically attempt to switch the tide and change this thing the other way. Whereas trend riders are attempting to take their stops and use them as fuel to run them lower. In this case, VPOC shifted down, and those buyers that came in to defend were successfully able to run the stops above 40.61 of those sellers that came in late, and they became the fuel that lifted price back to 5-day value at 40.79.5. Price later rallied into the prior session's close and then held above that zone. So all of this is bullish short term, very bullish short term, but again, we're still range bound. We have not seen expansion outside of the range, and until we do, it's going to be more back and forth range activity. But these types of clues right here really help you identify what could happen in the charts, you know, as the day progresses. But overall, the EOD chart of the NQ says more overall upside behavior, but the near-term expansion from this range could go either way. If it does break to the downside, look to take advantage of the short-term move lower, but be a medium-term or position buyer on the way down back into 39.8375 for a shot and new highs into 4,200. Above 41.10 easily runs the upside stops with targets at 41.43.5 and 4,200 and above. All right, that does it basically for the outlook for today's session here. What I wanted to do was briefly bring up a couple of closing notes. One thing is tomorrow we begin the boot camp. for the Mr. Top Step Trading Room. I am a part of that room along with other great professional traders. If you go to pivotboss.com, scroll down to the right, you'll see latest posts here. What you want to do is find a view from the MTS Trading Room. Sent an email out, tweeted it, blogged it. But basically, this blog post right here has a lot of links, a lot of things that you can participate in over the next couple of days. First of all, this is what it looks like, at times to be inside the Mr. Top Step Trading Room. Grabbing this type of analysis, grabbing this type of chart analysis. These are the types of things you'll find in the chat commentary. So you can see it's different type of analysis than you'd see from other types of traders. But what we do is we provide real analysis that influences price. We're looking for the real clues that are helping us determine where the price is moving higher or lower and what's going on. But the boot camp starts tomorrow, and I'll be honest. For 19 bucks, you can't beat it. For 5 days in the live trading room with countless professionals, at least 5-10 solid professionals that do this all day and day in, day out, putting their stuff out there. Others helping as well. There's also going to be lectures after the market closes by various professionals over the course of the 5 days. So not only are you going to be in there potentially making money taking some of these trades, you're also going to be learning things, and you're going to immerse yourself in a fantastic club of traders, just amazing collective of traders that I'm very fortunate to be a part of. So this is where the boot camp is. If you go to this link, you can sign up here, and it's just a very quick link, https://tradechat.me/bc sign up, and this is a quick form that gets you in. The next thing is I'm having a PivotBoss Masters open house on Saturday for current Masters members and also potential Masters members. Basically what I want to show is the work that's in there. If you're not familiar with Masters, it's my premier training for professional traders. It's going to be the best educational trading training that you'll get around. I mean, it is phenomenal, and this isn't my opinion. This is the opinion of others that have taken it. My opinion is always I got to work harder to be better than everyone else, and I hope that my work shows for me. But this master's education is brilliant. It's also a deal that seems too good to be true, and I hate to offer it because people do think it's too good to be true and think it's not legit. But basically, it's a fantastic deal. You pay one time to gain access to the recordings and the archive training, and you never have to pay again as new training is added and as new live educational sessions are occurring. You get to be a part of it, and you never have to pay again. It's just one time. You also get 3 months of my premium membership as well included, and then if you want to keep it after that, you can subscribe. So a lot of great stuff. Again, you can join me on the open house here, and this is going to be Saturday morning. This is the link, https://join.me. So it's a join me meeting. 384-285-490 is the digits. Make sure you download the desktop application of Join Me if you're doing this, because that allows you to connect to the internet audio and follow along. So that's the easiest way to do it. It's a very, very lightweight app that allows you to download, install very quickly, and you're connected in no time. So please join me on Saturday. I'm going to be doing several things for an outreach because I'm doing a new push for Masters because new courses are coming out. There are going to be 4 new courses coming out each of the next few weeks, starting with this week. And then we're going to have a 5-day live trading and training event for Masters only members in October. So it's going to be 5 days, 3 hours every morning for 5 straight sessions of live trading and training and camaraderie with all the other Masters traders. And again, you pay once, you never have to do it again. This is the second time we've done it this year. We'll be doing it again to begin the new year in January, and we'll try to do it a couple times a year, all the time. So again, pay once, never have to do it again. This is going to be Masters, so please join me for that. Again, everyone, thank you so very much. This is the first time I'm doing Google Hangouts. and I want to be able to do this more and more each week for a weekly a wrap up or a weekly review, very similar to what I did here. If you like it, please let me know, and I'll continue to do it. It's all about what you guys like, and I'm super eager to get out and get out and start doing some more of this fall. Fall trading is some of my favorite trading. I love it, and hopefully we can make some money together. So everybody, please join us as we head into the weekend, Friday, at the Mr. Top Step Boot Camp. Again, an awesome 5 days. We put on a good show, lots of trading talent to learn from. All right, everyone, see you all soon. Take care and trade well.